What is up, guys? Toss here. Welcome back to another video. So it's a mixed bag in the stock market today. We had the S&P 500 down 0.5%. We had the Dow Jones down 1.5%, and the Nasdaq 100 went up 0.6%, and the Russell pretty much just broke even on the day. So today we're going to talk about this, break down some technicals, go over a bunch of stocks I'm watching and looking to buy right now, and I also want to share with you guys what I've been doing in the stock market and in general where my head is at as a trader and as an investor. So if you guys find value, hit the like button, subscribe, make sure to go down below, get into the Strive Smart Discord chat, the Facebook group, get some free money down below, get 2 stocks from WeBull and $30 from M1 Finance, and you could also check out the Patreon. All of those are linked right down below in the description box. So let's just get right into it. And what we see right here is the S&P 500, and again, it had a red day. It went down 0.5%, down almost 20 points, and this chart in particular is the 10-day 30-minute chart. And you can see clearly yesterday we had a very big drop. The market sold off for the entire day for the most part. And today it continued. We actually hit a lower low. And that's kind of what I was talking about, right? I was showing you guys the past couple of days. I mean, the S&P was holding 3,800. I mean, we talked about that yesterday. We held 3,805 3 days ago, and the following day we held it. Obviously, we had a bounce back day that day. And then yesterday, despite the sell-off, I mean, we still held 3,800. And the fact that we took 3,800 out today, we hit that lower low. The bears are in charge. And, I mean, they continued the downtrend. Then we saw a nice spike up, a bit of a relief rally, and we hit a lower high and multiple lower highs, actually. You can see here the first one was at 3860 roughly, and the second one was at 3850. This was right before the market closed. I mean, take a look at this. If that's not manipulation or just selling off profits, I mean, I don't know what is, because the market went down from 3850 all the way to 3810 in about 10-15 minutes. That was a 1% drop. So that gave the bears, honestly, even more of an edge heading into the close, and probably for next week as of now, based on the technicals that I'm seeing. So the downtrend's intact. The bears won the day clearly with that lower low in the morning and with that big drop at the market close. And for next week, and I mean the future session on Sunday night, I'm looking to see what are the futures doing. Are we gapping down aggressively? Are we gapping up? And honestly, a lot of the time, the futures don't even mean anything. They flip-flop a lot, so you have to take them with a grain of salt. But we're still going to look at them. And of course, Monday morning, if we're seeing a big gap down, let's say the futures are red, large caps are red at market open and so forth, and we see a drop in the morning, we could be going to test the lows from today, 3790 roughly, and that would obviously mean the downtrend is continuing even further. And that was for the S&P. I mean, on the flip side today, we did see the Nasdaq go up 0.6%, although it does seem like on the 10-day chart, the bears are still in charge on the Nasdaq 100. I mean, we hit a low point. We didn't clear the lows from a couple days ago, but we got pretty dang close. We hit 12,760. We rallied a bit to 13,000 plus, and we closed a little bit above 12,900, and we're seeing a bit of a spike in tech today. I mean, Facebook, just knocked my mic a little bit there, guys. Facebook went up 1.1%. Apple went up 2% today. Netflix did go down 1.4%, but for the most part, tech was green. Google up 0.3%. Microsoft was up 1.5%. Amazon was up 1.2%. And we saw yesterday, I didn't talk about this. I completely forgot. I mean, I should have talked about this on the video, but we saw the 10-year bond yield. It went up a ton. I was reading the biggest or the highest point it was at in about a year, since February of 2020. And that is because A, inflation right around the corner. That's the reason why we're seeing that. And B, the economy is reopening. I mean, we're seeing this transition now, and that's kind of a reason why we're seeing this transition as well. because the economy's reopening, people are locking in profits in tech, hence why tech was down, and they're pushing money into, the recovery stocks. I mean, airlines have been outperforming, the cruise lines, and a bunch of stocks like that. I mean, industrials as well. And I was buying, what was it, Raytheon RTX. I mean, this is a stock that was doing well. Now it got beaten down again. But you guys get the point. A lot of there's been a lot of rotation, and the 10-year, yield being up a little bit and hitting that year point, it kind of freaked people out of the growth stocks a little bit, which is why we did see that big drop again and that rotation. And we'll see if that continues. And now that I'm looking at RTX, this looks like it very well could be a dip buy. So that's the first stock of the day, guys. Take a look at RTX. But either way, that's kind of what we're seeing here. I'd love to see hear your thoughts. Leave them down below in the comments. Hit that like button if you haven't done so already. And quickly, guys, let's talk about what I did today. And if you guys were in Patreon, of course, you know everything I did. And I didn't do much, but I do post real-time buy and sell alerts over there in Patreon. I ended up locking in profits on rocket companies, ticker symbol RKT, and I actually called this one out on Patreon about a week and a half ago, and this is one I personally got in at $20.95, and I wrote it up until today. I should have sold pre-market in the morning video this morning, which actually is live on YouTube right now. Go check it out if you guys want to see that. That's typically what I'm doing on Patreon every Monday through Friday. Just figured out to release a video on YouTube so you guys can see what it's like. We were talking about I was looking to sell out of Rocket pre-market, but I just didn't. I should have, because at market open, it completely tanked. It found support at 21.80, then it saw that pop, hit about 22.95. Actually, it cracked above 23, but that was after I sold it. I actually sold it right under this 22.70.60 resistance at $22, and it was 55 cents. Yeah, it's 55 cents. That is where I ended up selling out. It was roughly a 7% gain, so I'm very happy with that. I mean, we called it out about a week and a half, 2 weeks ago, tops. Got into it now, held through a little bit, and it was a swing trade to begin with, so that's fine, right? And I ended up selling into the strength today, and it's down a lot more than the point where I sold it from, so that's good. And maybe we get a lower price so I can get back into the stock, because this is one I'm definitely looking to re-enter, right? So that's what I did today, pretty much. Rocket. Took some profits there on RKT, and I'm still in a bunch of other stocks. I don't want to bore you guys. I mean, we've talked about these a lot recently, but let's just quickly name them for the new viewers out there. SLV, Silver ETF. I'm holding on to this. Might even add more to it here on the dip, as precious metals have been seeing a pull down. Gold went down 2.4% today. And silver, wow, almost 4%, down almost 3.6%. Let's not exaggerate, but 3.6%, even that's a pretty big drop. So SLV, I'm holding that. Tesla, I was so close to taking those rocket profits and going and buying more Tesla today, but I didn't do it. I figured, let me wait a little bit. And that's actually it was in hindsight. I didn't know in the moment, but in hindsight, it ended up being a good decision, because I was about to pull the trigger on Tesla when it was at like 688, 690, and now it's at 671 after hours. So if it dumps low 600s next week, that is where I'm for sure going to buy more into Tesla. So next week, we'll see how that goes down. Workhorse, I'm still holding on to my shares, and it went down 14% today. I didn't dump off the last little portion of my shares that I'm holding. I'm still waiting to dump out of those, but eventually I am going to dump out of those. SB is still one I'm holding. This went down about 7% today. NEO is also one I'm holding. This went down 2%. And Rocket, it's down here on the list. I don't know why. Did I even mention Skills? Skills is another one that I'm in. I think I forgot to mention Skills, but Skills is one I'm in. This one's gapping up nicely after market hours here, so I think this has headway, especially above 35. I think Skills has a lot of upside. And Tattooed Chef, that's another one that I'm still in, ticker symbol TTCF. So let me know your thoughts down below in the comments. What are you guys up to? What are you in? How did you end off the week? Did you make a profit? Did you lose money this week? Let me know down below in the comments. And of course, your thoughts, as always, are always appreciated. And now let's talk about some stocks. I have about 7, 8 here. Let's bang them out very quickly, and let's just do it. Starbucks, ticker symbol SBUX. This is one that completely outperformed today. It went up 4.4%, hit a high. It actually hit a high of almost $109.50. And, I mean, this is one that, yeah, now that we're looking at it in hindsight, it completed the inverse head and shoulder. If you guys can see this, I'm not sure if you guys can see it, but that's good. So the breakout today pretty much completed that pattern up to about $108, which if I extend this to the right, you'll be able to see this right there. The fact that we filled up to the that's not the neckline, it's the left shoulder, the bottom of the inverse left shoulder, right, at about 108. The fact that the right shoulder touched that's a very good sign. Now this could be a breakout play if we take out the highs from today. I mean, we went to 109.50. Now we're down to about 108 again, right around that left shoulder resistance, so we must break out of 108 again. And I think Starbucks, if we see this rotation, I think, honestly, yeah, I mean, I feel like Starbucks is definitely going to benefit from this rotation, and I think this could go a lot higher, and I'm not sure where it could go, but I think it could maybe break into the mid-110s, 115. That's kind of where I'm looking at here in the very short term, and I'm pulling back on this chart here. Yeah, I mean, this is actually an all-time high for Starbucks. So Starbucks just hit an all-time high. So if you're banking on it breaking 110, which I think is possible, I think 115, like I said, is coming. So that's Starbucks. Johnson & Johnson is another one here that pulled back 2.6% today. It's up a little bit after hours. Let me take a look here on the intraday. Yeah, it's up a little bit. I'm not too sure what's going on. Probably some V-shot news that I'm completely missing because honestly, guys, I've been out of the loop with that stuff. I haven't been really tracking it recently, just completely honest. So I guess I missed something here. I'm sure you guys know. But either way, I like it. When I see J&J go down in price, I get happy from a long-term perspective and from swing traders' perspective as well, because this one on the 4-hour, it's approaching 155. I mean, again, we're at about 160, 158 right now. So 155, that is a buy zone for me. I mean, based on these technicals, that was a big resistance. You can clearly see it here on the 6-month chart, right around 155. Big resistance. And if I pull it back on the yearly, you can see even further back from all the way in April. So 155, guys, is a huge point, and I think that would hold for a nice swing. And I'm going to be buying more for my long-term portfolio as well there, because when it comes to stability, I like having a core, right? I look at my portfolio as this. I have a core portfolio, meaning my core holdings. These are a couple of stocks, an ETF or two that they comprise my core holdings. I'm not looking to sell out of these. I only buy into them on the dip, and then I build everything around that, which includes the swing trading account, right? A lot of people might think that's my only account. That's not my only account. That is just my trading account at the end of the day, where I build money or income from, right? Where I take income from that, and then I fund that back into the long-term portfolio. So it's kind of like this continuous funneling process from one portfolio to the other, if that makes any sense. But I think it's good to have an overall, foundation, and then trade around that, and then have some risky speculative plays, whatever, around that. At least that's how I like to do it. And J&J is that type of play for me. Same with Pepsi. I mean, I'd consider this a core holding. This is down about $20 in the past couple of weeks. It's down about 13%. So that is a big drop considering, I mean, this is not a tech stock. It's not, a heavy growth stock. So the fact that it's down a bunch recently doesn't make much sense. I mean, if we dig deep, maybe into the earnings report, we could find a reason why it is down. But I think this is a decent buying opportunity as a swing trade. If you're willing to hold through some volatility, I think you could come out on top on this one. And for sure, as a long-term investment, I mean, in fact, I've been buying into this one recently in my long-term accounts. This is one that I like to buy in on the dips just for the dividend, for the stability, right? I'm not somebody that chases all of these high-growth stocks. I think there's a place for everything in one's portfolio, and I just put more emphasis on, these type of names, the Googles, the Apples. Not saying that the speculative stuff is bad. It's great, but you have to use it in smaller ratios, in my humble opinion, right? So Pepsi's one I'm watching closely. Exxon Mobil has been a money maker for me. I'm sure a lot of you guys made some money on this as well. This is one that I've been buying since about 42, been adding at 44, 45, 46, and now we're seeing a bit of a dip. It got a bit exhausted at about 57.39, and now we're trading in the mid-54s. We're down about $3 from that peak, down about 5%, and now we're right around that 50 SMA on the 4-hour chart, where every pullback we've seen, it's held that point at a higher low, and it's ripped up higher, right? It's hit a higher high. It's continued the uptrend. So I want to see if Exxon does the same. And for selfish reasons, guys, I would like to see it break the 50 SMA. If it broke the 50, then it would probably go down to about $49, $50, right around the 180 SMA. I think that would be an even better dip buy. So either way, I think that is it's going to be a buy, either or, whether it's $54 and we pop, or if we go to 50 and then pop. Either way, I like Exxon a ton. And on top of that, they pay a dividend, and it's a pretty good rotation trade. Although you might be, excuse me, guys, you might be a little bit late. Not gonna lie. I mean, probably the better entries were, in the mid-30s, lower 40s, mid-40s, but still 50, 55, considering if you pull back on the 3-year chart on Exxon, that's still not bad, because if we break 55, that was a resistance from back in the middle of 2020. I think Exxon could be going $60, $65 per share, based on this chart at least, so there is a little bit more upside. Although you might have not gotten in at the best price, there still is some more upside in my opinion. And Disney, I mean, we're looking at a bunch of these turnaround plays. I'm not bearish tech by any means, guys. I have tech positions, obviously, but I like a lot of these rotation plays. I feel like Disney, and let me know in the comments if you agree on this. I'm sure you guys will agree for the most part. I feel like Disney is a hybrid play. It's kind of a opening stock, or a reopening stock rather, because the parks, right, they bring a lot of traffic, a lot of revenue. So once those are at full capacity again, that's good. And on the flip side, they already have Disney Plus and all of these streaming, these media outlets, right? Which it's kind of like a tech company at the same time. So this is a hybrid play, in my opinion. It's going to do well if tech does well, because Disney Plus is growing. All of those are growing. And it's going to do well during the reopening, because the parks are going to reopen. Their revenue is going to slowly build back up. So I think this is a great play. I mean, I've been buying this stock this whole year pretty much. Not much recently, I'll be honest. I've just been holding it. But when it was in the 120s, 130s, 150s even, guys, I was buying a ton in my long-term accounts. And fun fact, in my girlfriend's account, you would not believe this. I wish I did this in my account. I actually bought her Disney shares. I bought her Disney shares, guys, in her account at the bottom, no joke, at $79 per share. That is the best time the bottom that the best time that I've timed the bottom ever, no doubt about it. And it wasn't even for my account, but it's okay. It's okay, guys, because yeah, she's making some money there, and either way, I've been making money with Disney from the 90s, 100s, 120s, 150s. This is one that every time it dips a substantial amount, I'm going to be buying because long-term, I love it. And DraftKings is one that I'm not a long-term shareholder of, but I still like it, and I really like this short-term breakout. Let me show you guys. And we were actually talking about this on Patreon on the morning update. And again, you guys can check out that morning update video, which is typically every Monday through Friday for Patreon. I uploaded it today on YouTube so you guys can see what it's about. So go check that out. And we mentioned how this downtrending channel is very big because I think and you can see it here on the highlighted oval, I think if 5960 breaks the resistance of this channel, DraftKings, excuse me, guys, DraftKings likely is going to fill the gap to $64, $65. I mean, that's where I think it's going. And today we broke out of the downtrend, right? Went up to about 62.50, right? And now we're pulling down to about 61.50. So we'll see if this, my voice ends up, working here, we could finish the video, guys. But yeah, you can see the breakout. So I think this is a continuation play. I'd say from about 62 up to about $65. So we're watching that. Chewy is one that has not yet broken up, but it is at that support of the uptrending channel. So very simply, guys, I want to see if Chewy holds $100. That's a big psychological level here on Chewy. And again, it's the support of this channel, so we must watch that. If we rip up, let's say, into 105, 110 even, that could signal even an even higher breakout there. So watch out for Chewy and Bitcoin. I've been getting a lot of questions on Bitcoin. Guys, you have to realize Bitcoin it's great. I mean, it has value for sure. Some people don't think it does. Some people think it does. I personally do think it does. It's a different value than some other, stores of value, but I still think it has some value. And a lot of people have been asking me, Stas, what are you doing now that Bitcoin is selling off? And the truth is, I haven't bought more yet, but I am looking to add more. I think I was looking at Coinbase. I think I'm looking to add more at about 45. If it gets to 42, 40, and now look, it's at 45 right now. I opened my app up. If it could get to 40 and even under, that is where I'm looking to buy more. And you have to understand, Bitcoin is kind of a risk-on play. And like we mentioned earlier, a lot of these tech names are falling, and that's why Bitcoin's falling aggressively as well. People are rotating even out of that, arguably, and into some of these names that we talked about already that are doing pretty well, and the other airlines, the cruise lines, all those other recovery stocks. So we're seeing a drop in Bitcoin. I think it could drop even further in the very short term, and ultimately I think it is going to bounce back. Same with those tech stocks, sooner rather than later, right? And I'm watching RIOT and Mara for the bounce back here of Bitcoin, because once it does bounce back, I think it will sooner rather than later, right? RIOT is going to do well. Same with Mara. And a technical spot here on RIOT is right around the 180 SMA at about $34. I think that could be a lower end spot of where it does end up getting. So that could be a decent buy. And for Mara, we're right around the buy point. I think right around 27, 28, even $30. That is a pretty key spot, considering that was a resistance all of January, even early February, and it's right around the 180 SMA on this 4-hour chart. So keep an eye on these points. If Bitcoin sees a big run this weekend, these are going to be moving like crazy on Monday, so watch out for that, guys. And we're going to wrap up the video here. I hope you all enjoyed it. If you did, hit the like button. I would really appreciate that, guys. Subscribe to the channel, and make sure to turn all of the notifications on. Simply go to that notification bell, hit that, turn all notifications on. If if you guys want to. And get yourself 2 stocks from WeBull and $30 from M1. All of those are free. Link down below. And you could also join the Patreon for buy and sell alerts, call outs throughout the day, real-time access to all that stuff, moves I'm making, and you could also talk to me via DM in Patreon all throughout the day. And you also get exclusive videos every morning, Monday through Friday. So check out the Patreon. That's linked down below. I'll catch you all in the next video. Thanks for watching as always. And the next video, by the way, is that morning video from today. If you guys want to check it out, I'll pin it right here. Go check that out. Thanks for watching as always, guys. Peace out.